Hey guys, my name is Matthew Spazziti and welcome back to the channel. So I wasn't really planning on doing a video today. This is not part of my weekly market analysis or anything of the sort. This is just a video that I wanted to go over. I was backtesting my 2786 trading strategy and I had an amazing win. Just probably the biggest win I think I've ever had. And I wanted to kind of show you guys what exactly happened and how I stuck with it, and ultimately showed you that sometimes sticking with a trade long term can really make or break you. I mean, this strategy, it was absolutely amazing, this particular trade. But before we get into that, guys, I wanted to show you guys my website. This is newmillenniumwealth.com, and if you guys haven't come here yet, go ahead and check it out. It's a pretty cool website. I have all sorts of blogs, not simply just relating to trading, but also relating to managing your personal finances well. You know, we cover topics here like economics, entrepreneurship, investing, personal finances, and trading. I've got my videos from my YouTube channel here. I got a podcast that's going to be called The Matthew Spazziti Program. As you can see, it's not here yet, but it will be coming soon in the near future. I've got a YouTube channel. If you guys are already watching this video, you already know that. I've got a Facebook page, a Pinterest page, a Twitter page. I got all sorts of kind of stuff. But if you guys want to be the first to know anything any of the content that I'm posting, if you want to know the stuff that I find interesting, that I read on a daily basis, subscribe to the newsletter, and yeah, let's grow and become financially free together. All right, having said that, let's go ahead and jump into the chart. So here we're on NinjaTrader 7. I'm still using NinjaTrader 7. You know, I actually tried to use the new version, NinjaTrader 8. It just didn't really, I didn't like it nearly as much as NinjaTrader 7. But anyways, that being said, we're on the Euro-Yen today. We're on the 60-minute chart, as you can tell. And we're going through the backtesting data, and we're currently in February of 2013. And right here, we almost had a double top option, but unfortunately, the highest high didn't equal the highest close for the first retest of this price level, or for the first test of this price level. So unfortunately, this isn't a double top in my book. However, as we go through the chart here, and let's just go ahead and scroll it down, we're constantly making new lower lows, and right here, around, oh gosh, I think this was 5 p.m. at night, we end up having the initial test of this price point, 119.22, and our retest occurred at 2 a.m. the next day, on the 26th of February in 2013. And of course, there's going to be another retest, so we have a triple bottom going on here now. And let's see if we break structure. So in order for me to go ahead and get long here, I would have, or for me to go ahead, yeah. In order for me to go ahead and get long here, I would actually need the market to come up here and close above this wick. So somewhere in the 121 area. So obviously, and I already know what it's going to do because, of course, I've already done this. But it's a pretty cool experience. I just wanted to share this with you guys. So here we go. We finally close above this wick area. So we got 121 right here. So I'm going to go ahead and use my Fibonacci retracement tool. I'm going to go swing low to swing high right here. I'm going to place my entry point at the 786 fib retracement level, which is going to be 119.29. And then we're going to continue to roll the charts forward and see if we can get an entry point. Now I do have a rule that basically states that if the market extends, retraces, and extends again, much like over here where the market extended, retraced, and extended again, then if this was a double top up here, this would have been invalidated with these extensions, retracements, extensions, retracement, extensions, and so on and so forth. However, this is not a big enough of a retracement for me to consider this particular double bottom to be invalidated. I need to see usually a pretty sizable retracement, like somewhere around here. Like this is a good retracement, this is an excellent one, and this is a good one. Now granted, I do allow for smaller ones. These are quite large retracements, but this unfortunately is simply just too small, for me at least. Alright, so I thought for sure we were going to retrace and extend, and we were going to really end up getting, you know, having this pattern being validated, but that didn't actually happen. So you see, we basically created another double top. Now again, in order for me to consider this to be a double top, I have to have an extension, retracement, extension. And like I said, because this retracement was too small to invalidate this pattern, it is also too small to validate this pattern. And a lot of nuances and difficult and confusing things that you get into when you actually start to create rules for your trading plan and things of that nature. But that's when you create a rule that says it has to extend, retrace, and then extend again in order to validate a pattern. Subsequently, it also will invalidate the pattern. But in this case, this isn't big enough to invalidate this, therefore it doesn't validate this one. But here we go. So we have a double top here, or at least what appears to be a double top. In your book, hey, if you want to classify this as a double top, then go for it. If this is a big enough retracement to you and your eyes, then hey, go for it. So there's a great book called Trade What You See, How to Profit from Pattern Recognition. It's a really amazing book. I think on Amazon it goes for like $37, something around there. And the author was Larry Pesavento and Leslie Juflas, or I don't know if that J is silent or not, or Juflas or Huflas, something around those lines. I have no idea. But either way, Larry and Leslie co-authored this book, Trade What You See, and it really is an incredible book. And basically what it kind of goes over is more or less just that what you see in terms of the markets can be legitimate. It just kind of depends on you. If you see this double top up here as a pattern, then trade it. Make a rule set that validates it, and then trade it with historical data. And backtest it with historical data, and then trade it with real money. Don't trade it with real money before you backtest. Trust me, don't do that. For those of you who watch my channel, I just did a video on my 6th episode of my weekly market analysis, where basically I created a trading journal for my TradingView posts. And every time I take a trade, I enter it into an Excel sheet and I track it, much in the same way that I do with my backtesting here, which is awesome. The trouble is because I haven't backtested the strategy that I use to analyze the markets on TradingView, the trades aren't exactly the most accurate in the world. I think I did the calculations on it, and it's only like 34% accurate given the number of trades I've taken so far, meaning 34% of the time it's actually winning money. The rest of the time it's not. Now, here's the thing. It's also the summer months. This particular strategy that I trade on TradingView, or at least that I use to analyze the markets on TradingView, doesn't exactly perform very well in consolatory market conditions. It performs really well in trending markets, but not powerful trending markets. But anyways, that's another story for another time. So we have our double top here. We're coming back down here. We created what appears to be a double bottom, although again, we don't really have an extension, retracement, extension. An extension would have broke this wick down here and then retraced and then continued lower, and then I would have considered this to be a double bottom. We didn't get that though, so I wouldn't consider this to be a double bottom. However, it is a double price retest. The market did retest this area twice, which is normally a reversal signal. That being said, though, what we're kind of looking for right here is we're just looking for the market to come down and hit this price level. Let me go ahead and change the color here because normally, I'll be honest, I don't actually change the color. You know, we're going to change it to purple. Purple will be easier to see for you guys. Yellow is fine for me, but you guys probably can't really see that. Say red for the stop loss. And we're going to go with lime green, or just lime for the target. Okay, now as you can see, we're taking a very small amount of risk compared to our potential return here. And this is where this really becomes incredible. So this trade happened over several days. If I was watching the market every day, I would have seen this at some point, and I would have placed my price alert here, and I would have placed a potential entry here over time. Now, as we continue to scroll through the market is going to continue to come down. Oops, I actually moved the entry a bit. Okay, 28. The market's actually going to kind of consolidate sideways for a bit, and then it's eventually going to make new lows right here. No, actually, we didn't make new lows there yet. There we go. There's the new low. So it is at this given point in time that I think that the market has a very strong possibility of hitting my entry. Now, considering the fact that this strategy only ever wins like 30 to 20% of the time, it doesn't win very often, you know, I wasn't really planning on this particular trade to really make any money. However, in this case, it actually did. So here's what happened. We finally hit our entry point. I go ahead, let's zoom out so we can see our stop loss and our entry, and our target. We're going to zoom out all the way here. So it actually hit my entry point. I assumed that, like most circumstances, it's just going to stop me out. It's going to continue to be bearish, and it's going to stop me out at this point. Now, little did I know, this was a reversal in the market. And we're going to see that here in just a few moments. The market's going to continue to just kind of go sideways for a bit, and then it's going to spike. And I was like, no way is this going to actually get filled. I mean, on this currency pair, the euro yen, this has happened multiple times on this currency pair. But, I mean, it doesn't happen very often. It's kind of a rare event. But, I mean, I was like, no way, it's not going to work. It's just not going to happen. And then it starts going to go down, and then it finally spikes and touches my target at 125.94. Now, I don't know about you guys, but when you look at this, just freaking look at this. All right? Let's see. Let's do F2. I mean, just look at this. We've got right here. We're going to copy. We're going to paste. Move that to there. Going to paste again. I mean, seriously, this is an absolute incredible trading opportunity. Again, when the trading opportunity, at least with this particular strategy, is this much in your favor, you're not going to win. You certainly don't win very often. At least I don't win very often. But when I do, guys, man, do I win big. And the whole theory behind this is that I'm going to sustain losses pretty much the vast majority of the time. But then every now and then, I'm actually going to make massive amount of money, and with that massive amount of money that I make, it will easily make up for the losses and then some. That's the theory behind it. All right, so right here. So let's count it up. Got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. We have a 10 to 1, or we have a 1 to 10 risk to reward ratio. We're risking 1, and we're going to make 10 times a little less than 10 times the amount that we are going to stand to lose. I mean, that is incredible. Absolutely incredible. So, that being said, let's go ahead and jump over here to the actual trade journal. And here was the trade. So, we entered at 119.28. We had a stop loss at 118.62. That's a 66 pip stop loss. And then we had our target set at 125.94. This occurred on the 31st of March in 2013. It occurred at, we got entered at probably 11, oh, what was this? This was 12? No, I'm sorry. No, I was right before. It was 11 p.m. 11 p.m. Sunday night, we actually entered here. Now, in reality, I would not have been watching the markets at 11 p.m. on Sunday night. However, I certainly would, if I had seen that trade, and as you can see, I mean, we had several days worth where I would have been able to see it, particularly if I'm coming in every single day. There's no way that I would have missed this. I would have put a price alert option on here, and I actually would have put an entry point, probably a limit order, a buy limit order is more or less what I would have done. And yeah, and then if my limit order got picked up, I would have put a stop loss down here and then a target up here. So as you can see, there were plenty of opportunities here for me to add an alert here and just monitor the price. And I probably wouldn't have put a buy limit order here until I started seeing this come down closer and closer. And then, I mean, probably would have just been a price alert. And as I start seeing get closer and closer, then I probably would have put some kind of a buy limit order down on there. But either way. So, and here it is. We got filled. Our target got filled on April 5th, 2013 at 10 a.m. in the morning, and we ended up making $666. $666. Seriously, guys. I mean, let's go through here. I mean, yeah, we've had some pretty big winners here before. I mean, here's a 249 winner right there. 240. So 249 was the largest win I've ever had up until this trade. Now, I mean, freaking A. Look at the profitability. We're in $4,000. We took a $3,000 account, turned it into $4,000. That's with no money management. Once you start putting money management in, this gets even better. Way, way better. But we're not really covering that here today. But I just wanted to show you guys. I mean, 666. That's incredible. I mean, man, that makes me super psyched. I cannot believe that I just made that much money. I mean, I know it's not real money. This is just backtesting. But freaking A, guys. I mean, absolutely amazing. The very idea that that's the biggest win I've ever made in all of my backtesting experience. I've never made that much money, even hypothetically. Never, ever, ever. So I just wanted to show you guys this. This was a great trading opportunity here. And ultimately just wanted to show you, I mean, it would have been really hard to stick with this trade. I mean, once you got entered, it really only took a few days for it to come to fruition. But, I mean, believing in this kind of trade, believing that this could even happen with this system, I never would have believed this if I didn't backtest it. And that's the whole point of this episode. Backtesting. Backtest, oh yeah, and more backtesting. That's the point. Okay, I never would have believed that this would have ever had even happened if I hadn't had previous wins of $119 or $249 or whatever. I mean, I knew that there was a possibility of this because I've seen something similar before, but I've never seen anything this big before. I've never seen a trade this big where the market absolutely just had a reversal. I mean, I had no idea this was going to happen. I mean, I don't know if you can tell by the excitement in my voice, but I had no idea that this was actually going to happen. I don't know what the current exchange rate is for the euro yen right now. I mean, it's just a bunch of numbers to me. I have no idea what it is. I could probably guess that it's somewhere in the 100 range, but I really don't know. I mean, I really have no clue. So honestly, guys, it's not like I had some kind of biasness here about any of this. I had no idea this was going to happen. This is absolutely incredible. And this just goes to show you the power of backtesting. Now that I've seen this happen, now that I've seen other trades that were of similar size but not quite as big and that ended up making me money, I mean, now that I've seen this, it drives in the belief in the system. It just does. It drives in how much I believe in this system. It's absolutely incredible, guys. So that being said, that's kind of all I had on that I wanted to talk about today. I just wanted to show you guys that the power of backtesting, guys. It is incredible. It really is. And I can't stress it enough. Backtesting is key. It doesn't matter what you're trading. You need to backtest it first. You just need to. And I'll be honest. Okay, look. If you look at this, sure, I can see that it was at the exchange rate was at 140 and went down to 120, but it fluctuates all the time. I had no idea. I honestly, really, that wasn't in my mind when I took the trade. I'm trying to get you guys to see. I didn't have a bullish bias here. Not like I do with stocks. If I'm looking at a stock chart, I kind of have a bullish bias because, you know, whatever it is, stocks, ETFs, you know, stuff of that nature, I just have a bullish biasness because there's so much money that's flooding into it. There's so much monetary and price inflation that is streaming into the stock market at an unprecedented rate. So much so that I have a bullish bias because of my knowledge of economics. Not to mention the idea that, I mean, the markets do crash every now and then. Sure, probably every 7 to 9 years, depending on who you're talking to. But overall, the market pretty much goes up. And there's a lot more than just inflation that's involved there. There's also just the idea that people throw their money into it. You know, 401ks, IRAs, Roth IRAs, you know, a whole host of retirement vehicles and all kinds of stuff, mutual funds, ETFs, you name it. There's a ton of money that's flooding into this market all the time. And these people are not shorting the market. They're not really selling these positions, particularly if it's in a 401k. You can't really take your money out unless, without taking like something I believe like a 20% penalty or something around those lines, unless you're like 65 years old. You can't take your money out of it. So a lot of people are throwing money into the markets and they're not selling. which actually ends up reducing liquidity quite a bit. So when there are sellers, because a big portion of the people that are in the markets are not actually buying and selling and willing to switch up their positions, it actually is pretty easy to imagine that finding enough sellers can be difficult. And you could fall into what's called like a liquidity trap when there's just not enough buyers coming into the market when everybody wants to sell. So you end up getting stuck holding the bag of probably a very toxic asset or something around those lines, which unfortunately did happen in 2008, in the financial crisis in 2008. But we're getting off topic. Guys, backtesting is incredibly important. You need to do it. I know it's not fun. I know it's boring as snot, okay? It is boring. But it's freaking important. You need it. If you want to become a consistently profitable trader, you need to backtest first. The analysis I perform on TradingView is just that. It's just practicing. It's just analysis. There's no backtesting that's been done there. But I'm also not trading real money. And I'm very open that, hey, I'm not taking these trades in real life. I'm just analyzing the markets, seeing if I'm right. You know, analyzing the markets with historical data here on trading or NinjaTrader is much, much more different than analyzing the markets live. It's a lot different. Even though I don't know where price is going to go, I guarantee you it's still different. And even if I had a bullish bias, even if I had confirmation bias where I knew the exchange rate was going to be higher than 119 yen for 1 euro, even if I knew that and I had that confirmation bias, I have no idea when that's going to happen. I didn't know that was going to happen here, which honestly I didn't. Again, I didn't have the confirmation bias, but I had no idea. I mean, you have no idea when it's going to happen. I had this experience when I traded Apple. I was actually backtesting a strategy on Apple, and it was the 618 pullback strategy that I used to analyze the markets on TradingView. And it was actually a very profitable strategy. I was able to backtest several years worth of Apple, and the trading strategy was constantly profitable, but I had a confirmation bias. I knew the price of Apple before doing the backtesting. I knew where the market was going to go, so I had a bullish bias as a result. And that bullish biasness actually got me into a lot of trouble when the market when Apple crashed several times during the financial crisis and during the time when Steve Jobs passed away. During those moments, the market for Apple actually crashed quite heavily. And in reality, I continued to try to maintain a bullish bias, and it actually resulted in a lot of losses. If I hadn't had the bullish bias, I might have been able to turn around and start making money in those moments as opposed to holding on my losses. Now, eventually I did turn around and I started turning bearish when I realized that the bull market was at least temporarily over. But I still had it in my head that we were going to be bullish at some point again. And that's why I like backtesting over currency pairs, because honestly, guys, I don't have the exchange rates memorized. The exchange rates are fluctuating every single day. And I really don't have those numbers memorized. I don't know what the pound is exchanging for with regards to the US dollar. I don't know what the yen is exchanging for with regards to the Australian dollar or the Canadian dollar. I don't know. I have no idea. I don't have those numbers memorized. So to be completely fair with you, it's much easier for me to backtest the currency pairs because I don't have a confirmation bias. I don't know where it is. I don't know where the exchange rates are right now. And that's actually why I like backtesting over the Forex market as opposed to, say, commodities or, say, the stock market, because your confirmation bias can influence your trading, and not in a good way. It can really manipulate your trading data and make it look a lot better than what it really is. All right, guys, we're coming up on almost 30 minutes here, so I'm going to go ahead and end the video right now. Guys, if you like this video, please hit the thumbs up button, subscribe to the channel, and don't forget to sign up for the newsletter, and ultimately just be the first to get any kind of content that I pump out. Also, if I find any kind of information that's out on the internet ethos that's about economics, something I think that is interesting that you guys need to know, or whether it's about investing or trading, whatever it's about, I will send it to you. I will send it to you. I will read it myself. I will vet it through me, see what I think about it, and then I'll send it your way if I think it's interesting. Alright guys, I hope you guys have a great day today, and I'll see you in the next one. Remember, know the risks, plan accordingly, and have a great day.